Secure your future. Financial planning for a better tomorrow. Don't let the idea of securing your financial future overwhelm you. Taking small steps today can pave the path to a brighter tomorrow. With these 10 invaluable tips, you're embarking on a journey to safeguard your financial well-being for the year ahead and a lifetime of financial security. It's time to empower yourself and make smart financial choices that will pay off in the long run. So, buckle up and get ready to unlock the secrets of financial success, one step at a time. Your future self will thank you for taking action today. If you are new here, subscribe to the channel and hit the bell icon to get instant notifications of upcoming videos. Let's get started. Number 1. Start with your annual budget. Setting a clear budget is one of the first things you should do regarding financial planning. Budgeting isn't fun, but it can help you identify lifestyle improvements to increase your savings and financial stability. The goal is to live within your means and determine how much money you can save each week, month, and year. As a general rule, you should follow the 50-30-20 rule, which states that you should spend 50% of your income on requirements, 30% on wants, and the remaining 20% on savings. Number 2. Calculate your expenses. Although saving every receipt is unrealistic, you should always monitor how much money you spend each month on essentials and luxuries. Then, there are 2 questions you need to ask yourself when it comes to expenses. Have you kept your spending within budget? How much have you managed to save? If you responded no and nothing, you need to determine what unnecessary purchases derailed your budget. Small sacrifices now will go a long way towards protecting your future, and there are some wonderful financial applications you can use to manage your daily incomings and outgoings. Number 3. Review your short, medium, and long-term financial goals. At the start of each year, reviewing your life and considering any possible changes you'd like to make, including your financial status, is a good idea. What's new in your life? Have your financial goals changed? And more importantly, are your current investment strategies working? Adjustments should be made if your financial situation needs to be more satisfactory before making any major adjustments. It's a good idea to talk with a financial advisor to be sure your new goals are realistic and can be maintained effectively. Number 4. Reassess your attitude to risk. Attitude towards risk is crucial when it comes to managing your investment. Have you remained as bullish as you were a year ago? Or have you become slightly less so? If your risk appetite doesn't match up with your goals, talk to a financial advisor. A financial advisor can help you reorganize your investments and breathe new life into your account if this becomes necessary. Number 5. Grow your savings. You should begin saving right now if you haven't already. If you want to be financially secure, you need to start saving as soon as possible rather than waiting until you need the money. There is no one correct approach to managing your savings, but you should at least review your progress once a month. Some people try to make up for lost time by saving a huge chunk of change in a short period of time, but the reality is that most people wait until it's almost too late to start saving for their desired retirement pot. Don't hoard more cash than you can reasonably afford to lose. Building up the pot for retirement or other long-term saving goals should be considered a marathon, not a sprint. Number 6. Safeguard your personal, family, and business protection. Many things can go wrong in life, so assessing how well you and your loved ones are ready for unexpected events is crucial. For instance, if you become unable to work, you might discover that your life cover provisions were inadequate. You may want to reconsider your original plan to keep your loved ones safe and ensure they can maintain their current standard of living. In addition, business owners face their own unique dangers, such as the effects of losing an indispensable employee. Verify that your company's insurance policies will pay for the costs associated with an absence or substitute hire. Number 7. Take into account any life-changing events. You'll need to consider how other, more positive, life-changing occurrences will impact your short and long-term finances in addition to planning for the worst. Such moments may include getting married, getting a raise at work, having a child, or launching a new business. If this is the case, be sure to update your financial advisor so that they can assist you assess how these changes could affect your present portfolio. You'll have to reevaluate your chances of getting ahead financially, saving for old age, and making the most of tax and insurance breaks. Number 8. Establish a repayment plan for any debts and claim potential credit. If you've gathered debt over time, it's essential to establish a solid repayment strategy. Prioritize paying off high-interest debts like credit card balances, holiday expenses, and personal loans, as delaying even a single payment can lead to bigger financial problems. Staying on track with your repayments has added benefits. Some credit card providers offer rewards like points, cashback, or vouchers. If you plan to apply for a loan in the coming year, maintaining a healthy debt-to-income ratio and a good credit score is crucial. Number 9. Invest in your financial knowledge. Expanding your understanding of investment landscapes and financial markets can enhance your financial knowledge. It's advisable to keep yourself informed by reading key news stories related to inflation and ongoing market trends, since these factors impact your savings. Some leading fund management companies, such as BlackRock and Fidelity, offer weekly news sections on their websites tailored for investors. Moreover, researching doesn't require delving into extensive books in today's digital era. Many financial experts create podcasts and utilize platforms like YouTube and TikTok to simplify intricate technical and financial concepts for easy comprehension. Number 10. Seek the advice of a financial advisor. Preparing for the upcoming 10 to 15 years requires dedication, especially when you have intricate objectives like securing a mortgage or establishing a self-invested personal pension. While a few individuals possess the expertise to handle their finances independently, most will eventually seek guidance. A financial advisor is the ideal source for expert insights in such situations, and their input can prove to be invaluable. If you already have a financial advisor, it's advisable to schedule periodic check-ins, preferably once or twice a year. This way, they can review your financial strategy and ensure it remains aligned with your evolving needs and goals. Thank you for joining us on this journey to secure your future through financial planning. We hope you found the insights and tips shared in this video valuable as you work towards a brighter tomorrow. Remember, the power to shape your financial destiny lies in your hands. By taking proactive steps today, you're paving the way for a more secure and prosperous future. If you enjoyed this video, don't forget to like, subscribe, and hit that notification bell for more empowering content. Here's to a future filled with financial success and peace of mind. Until next time, take care and keep planning for a better tomorrow.